This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe. We're going to talk about the market today, try and get through a few indexes, but a lot to talk about. And also, just let you know, I put out a new show on Stock Charts TV, my Stock Talk show, yesterday. So just be on the lookout for that. You can find it on YouTube or on the demand, as I mentioned last week. Let's get into the discussion on the market. We've got finally have some real selling showing up as we have been discussing now for a few weeks. So one of the things I'll just start out, we'll just look at this monthly chart. And let's recognize that this is the first time we're taking out a monthly low in quite some time. It dates all the way back to October of last year since we've taken out the low of a prior bar's low on the monthly. So we've gotten pretty far away from the 18-month line. We have a little open air that we need to fill in. And that looks like it might be on the lookout for that. Now, recognize this also. Look at the volume. See how the volume was greater than it has been over the last 1, 2, 3, 4, 5 months. So this is the today or Thursday is the last day of the month, and so this tells you how much volume there was relative to the last 4 or 5 months. So I think that's pretty important. It's a down bar on expanding volume, and we're taking out the prior bar's low. So definitely relevant information there. Now, we still have some open air before we hit support. And as I mentioned, one of the things that I would tell you is that I probably wouldn't be looking for a move all the way down to the 18 in this situation. As long as the ADX is rising, you could look for pull up a 9 or a 10 MA, and it would be somewhere around, the midpoint up here, just above 400, something along those lines is really where the midpoint between price and where this line is. That'd be kind of what I'd be looking for. Now, if the ADX actually turns down as we're pulling back, then it's entirely possible we'll go all the way back down to the 18-month line. That would be a big hit. Now, the weekly chart, as we've been discussing, is finally showing red DI kicking in. Remember, we had the divergence in the ADX exhaustion pattern where ADX couldn't make it above 25, even though price kept pushing higher. MACD started to confirm, and now we've gotten sellers to show up, and it looks to me like we're getting pretty close to the point where we got to start thinking that this 18-week is giving it up. So key levels to be on the lookout for the spider is right around this 420 area, maybe a little bit above that. And then the next level is, it's more of a zone, actually. Let me just draw this in as a box. If I can find the box, here we go. So there's a low here and there's a high here. So I would do something like this if I were going to draw in where support and the next support zone is. That's assuming that this first level doesn't hold. So we've got pretty strong ADX, rising ADX condition. Notice the volume pattern on the daily. So let's just zoom in on this daily now. I like to define the support and resistance off the weekly and then go down to the daily chart to really see what's going on. Look at the size of the volume bars, lots of distribution. We broke the uptrend line and tested. So this is where we left it last week. What was going to happen here after breaking the trend line. We tested it and we hit the 18 and the 40 day, and then immediately started to work our way back down. Look at the pinch that developed. Now, there wasn't really an entry off the pinch, unfortunately, because it gapped. But we're getting good confirmation from red DI and ADX, which is now rising. So this is in a pretty strong trend. I think that there's a pretty high probability we're going to at least make it to 420. And that, for all I know, we are going to make it into this bigger zone down here closer to 400. So just something to be on the lookout for. Now, I really felt it important to show you I don't look at intraday charts. I mean, if you notice, when we were going up like this, I don't even think I brought up the hourly chart. I didn't even look at it. But once we start to get into a situation where the momentum is not as strong, then we have to be a little bit more active in terms of protecting our longs. And so that's the type of stuff I've been bringing up. So I wanted to show you this because if you notice what happened, we had this gap down off this level. Now you could have just put on a short up here just because of how weak the pattern was. But the reality is that the signal really took place here in this area as we came back to the 18 on the hourly chart, because we had the big down move and then we finally worked our way back, worked off the overbought. We had a pinch developed. Now, it's really hard to see any kind of a signal when we look at this. Look at the way this played out. I think it's really awkward, and it's hard to say, what the trigger would be using an hourly chart. But let's just go down to the 10-minute. Now, again, I don't look at these intraday time frames unless it's necessary, but look at what this played out. And it is exactly the patterns that played out right out of my book. So I think it's really worth talking about. So we had this little upswinging trend line making higher highs and higher lows. We had the break of the trend line and then the rally back. That qualifies as the 2. And on the 2, look at that little 1 higher low, 2 higher lows, 3 higher lows. And if we look at where that took place, we had red DI crossing and holding, and we had a pinch play. First cross of the zero line, and we get a pinch. That's the signal. That's the operative buy. If you're going to short it or whatever, that's really the spot to do it on, and you got immediate follow through. This trade would have been a really easy trade if you did it intraday. If you're doing it for multiple days, you had the rally, but now we're at another new low. So now we've got this series of lower highs and lower lows, and you can draw the downtrend in place. But I just thought this was a great example of the 10-minute. Sometimes it's not clear when you're looking at an hourly chart or the time frame you want to enter off of. It's not crystal clear where to go. So go down a time frame. See if you can see these reversals in trends, these 1, 2, 3 changes in trend. I think they're really important. So anyway, I thought that was worthwhile. Let's look at the Qs, because the Qs actually, since this rally, they had a little bit of a weaker rally, didn't make it all the way to the 18, but it's had a harder hit to the downside than the S&P. And if we notice here, we're already at a new low, where the S&P is basically at the prior low. This is taking out the low for the last couple months again. Pretty good volume activity, and we're sitting at the 18-week line right now. I think the odds are increasing that we want to come down towards this support area down here in the low 340s for the Qs. I mean, I think the odds are starting to increase just based on the buildup of what's taking place. We're crossing down on the, look at the weekly MACD crossing down, and ADX is now backing down as well. Not a lot of strong selling because red DI isn't above 25, but look at how it took out these prior 2 peaks on the red. So that's a pretty strong move for red, even though it's not above 25. So I think these are all relevant points that we want to be on the lookout for. Let's take a look at the IWM, because as we're making new lows in the QQQ and the S&P is testing its low from August, this is making another higher low. So I'm not sure if this is going to be able to survive, but I am of the opinion, based on how well this is holding up, that it wants to be a leader. Now, typically when the market's getting ready to really get thrashed to the downside, you'll have the Russell 2000 leading to the downside. So the fact that it's actually holding up a little bit better is I think an interesting sign here. Something we got to keep watching. There's no operative buy until we get a move back up through a minimum up through 230, but something we have to keep watching for, because if this triggers back to the upside, I think it bodes pretty well for the overall market. Follow up on the TNX. We came down to the 18-month line, which was turning to the upside, had a nice pinch play on the monthly, and now we're crossing up through with a zero-line reversal in MACD. So yes, this will work on treasury notes, right? Treasury yields. This is the yields of the treasury, 10-year yields. So you can pretty much use these same strategies on anything that'll have an open, high, low, and close on a regular basis. Now look at the low ADX breakout, and we're getting some follow through. I expect some resistance up around 1.6, 165, something like that. And then finally, Bitcoin came down to the 18-week line. We were talking about this. See how that 18-week just turned up. So this is a critical level. We need to hold 40 here. If we don't hold 40, this is coming down pretty hard. That's my bet. Now, if we hold this, then we have to start looking at, are we going to get up through on a weekly basis? We're trying to do a little bit of a zero line reversal here. If we can get back up through these 2 moving averages, then I think you have to start giving this credit for potentially being a turn where have a rising 18-month and we're above it. And a 18-week that's finally turning around, and now we're getting above, getting confirmation that it's holding, with MACD holding this signal line. And then if we get this turn at the 0 line and we get through these 2 moving averages, then I think we have all 3 timeframes kind of back in line again. So something to be on the lookout for. I don't know if it's going to happen or not, but I do want to be aware of these levels. I think it's worthwhile watching because this is at a pretty critical point. This is either getting ready to make a move to the downside or it's going to hold here and we could actually work our way through 50. All right. That's the update for the week. We'll see you next time.